Hello, and a very happy Tuesday to everyone who is here. Yeah, hi, this is Ming Hon, and I am your host for Traders Talk today. And for those of us who have followed us, welcome again to today's Traders Talk. And we will cover some interesting topic today. And of course, basically, what we have this in this show is we talk about the market, the stock market. And for those people who aspire to learn how to trade, this is actually a show for you. And also for those people who are already trading in the stock market, this is also a show for you to follow. Yeah, because we'll be covering a lot of topics in our various trader stocks, and of course also the happenings in the market, and also some of the potential trades or some trade setups which we have been following on and off. We will also cover in this trader stock. Yeah, so this is a show for you to actually follow if you are aspiring to be a trader and you want to actually get some good things from the market. Yeah. So this week, the week actually started not too good. Yeah, as you have actually seen, yesterday was actually a red day where the S&P actually has dropped by about 43 points. So it's actually a bad start of the week after after last week, which was quite okay. I mean, last week the market has actually went up by quite a lot, and this week we started with a big red candle. Yeah, almost about 1% down for SPX. Of course, there are some things which are happening this week. One of it is actually the Fed discussion, I think on Wednesday, if not wrong. Yeah, possibly they will probably talk again. Nothing other than the two topics which they talk about. Yeah, they talk about only interest rates, which are interesting to the traders, right? Or the market, right? Which is only about this interest rate hike and also tapering, right? I mean, as far as interest rate hike is concerned, they have already indicated that they will start to hike the rate starting from next year. Yeah, it is just to confirm whether they will actually do it earlier or probably towards the mid of the year. But I would think, I don't know. I mean, if you look at the inflation rates, which was published last Friday, I think, 6.8%. Yeah, higher than the earlier one by another 0.6%. So inflation keeps going up. And of course, for the Fed to actually control this inflation, right? So one of the action which they will likely take is to actually increase the interest rate, so to actually keep this under control, because it has been the highest, I don't know in the past how many years, the inflation rate in the US, you see. So far, I mean, of course, over the past year, the Fed has been spending a lot of money, giving a lot of incentives and all. So a lot of people has been spending. And come these few months, especially with all the problems in the logistics and all, prices has continued to actually go up. Yeah, so that's one hot topic which probably we will know what's ahead on Wednesday. So probably because of this, the market is also having CC look kind of feel like, I mean, for those traders or for those investors who have probably so far, I mean, achieved some profit targets and all. I mean, for them, they would not mind to actually just sell off some of the position, because times are really uncertain right now. Yeah, I mean, last week everybody is happy, market is up, and then suddenly Monday it starts the week with a big red candle. Yeah, so for now, I think S&P was red already. The futures was already red. the futures is already red this morning. I think now is still red. Nasdaq is also down, you see, in the futures market. Let's just put up this. Yeah. This was yesterday's position. Yeah, yesterday's position you can see. And then on Nasdaq, right? It is also down by 240 points, which is 1%. I mean, I would say it is quite a big down day lah. I mean, if you compare the past, right? I mean, if it really go down, it can go down a lot, right? But even this big candle, about 1.5%, right, is considered quite a bad day. So for many, you can actually see your portfolio also getting red yesterday, yeah, and last week was all most of the time green, right? So you will see some of the positions, your positions, be profit. I mean, if you have any position in profit, right, it will probably come down. So for me, I would have actually for those trades which are already in profit, right, I would not expect much, and I'm basically cutting. I mean, taking profit on those profitable trades already. Yeah, and of course for those which are still in a loss or needs a bit more time, right? Those are the trades which I'm actually carrying on, and I would think probably we will need to actually carry it over to next year. Especially a lot of positions on cash secured puts, right? If you have been doing any cash secured puts, right? I would say a lot of it would be in the red lah, because of the market correction in the last 1 or 2 weeks, and the market have not really gone back to the earlier highs, as it. Yeah, so that would be, I think, for a lot of people who are actually facing this situation right now lah. So when you're actually facing this situation, right? So what can you actually do? So this is also a topic which we want to cover this week, right? I mean, basically, when all things fail, right? I mean, basically, you can see that your portfolio is actually not working out, right? How do you actually ride on during this volatile time? Yeah, and basically, how do you actually trade your portfolio? I mean, what kind of stocks which you should trade and what you actually should not trade during this time to be safe, because you would not know if one day is actually up and you think that it will continue to go up, right? The very next day will actually come down. And of course, you might also feel this lah. I mean, you might also feel this in some of your, maybe your colleagues or your spouse or your boss's feeling, right? I mean, emotion. Okay, so example, when market was actually down yesterday, right? Yeah, so of course when market down, most of the time people lose money, right? So when they lose money, what do you expect? What do you expect to see when they lose money? Very sour face, right? So when you go into the office today, let's say you went into the office today, right, and you probably see some of your colleagues or some of your bosses, right? If you see them sour face, highly likely they lose money yesterday. Yeah, and on a market down day lah, yeah, and if you go to talk to your boss, or if you want to actually ask something from your boss, don't do it on a market down day. Yeah, if market is down on Monday, yes, like yesterday, right? Today, don't go and talk to your boss and ask for increment, okay? Because highly likely you won't get. Yeah, you won't get an increment. In fact, the boss will tell you, why don't I cut your salary? Why don't I cut your salary next year, because the company is not doing very well? Actually, it's not the company is not doing very well. It's actually his portfolio not doing very well. It's losing money. So remember, guys, if market is down the day before, don't go and see a boss to ask for increment, yeah, or ask for any favors, yeah. When the market is green, very green, the market goes up by 2 or 3%, right? That is the time when you actually go and approach your boss to actually ask for favors or to actually try to actually ask for increment, because highly likely you will be able to actually get it. This is my tip from you for you guys. Okay, so how to trade the market volatility? And of course, when the market is volatile, right, very likely that you actually see all those stocks which are not that strong. I mean, not that strong. Not to say not that strong. I mean, stocks which don't make profits. I mean, but of course, those stocks might be followed by a lot of people. And of course, during those days, when the market is actually down, highly likely those stocks would be actually sold down first, because people are uncertain. I mean, at the end of the day, if you're talking about tech stocks, when they uncertain if interest rates will actually be hiked, right? So there is actually a risk that when interest rate is increased, then of course, most of the tech stocks, especially the unprofitable one, would actually be the likely stocks that will be hit. So when people actually trade these stocks, when the stocks has actually gone up very high, right? Yeah, and of course they would probably have made some percentage of profits down there. Yeah, and when the risk comes that the potentially the stocks might be affected with this kind of news going forward, right? So most likely, these traders or these investors would actually sell down the stock when they see things are red. They will actually sell down the stock first. Those are the first one which they will actually sell, because they want to protect their profits. They have actually already made profits. Yeah. So those are the stocks which you would probably need to shy away during this time. Yeah, unless it goes down a lot, unless it goes down a lot and you think that that it is actually oversold, then you can actually try to go in on the basis that it's actually heavily oversold. Otherwise, if you don't see any chart patterns or any entry points, don't enter into those stocks. Yeah, and again, to be safe, right? We would actually want to trade more on these fundamental stocks, and of course, the key fundamental stocks on the and the favorite in the stock market is still the FANG stocks. Is still the FANG stocks: Facebook, Amazon, Apple, Netflix, and Google. Yeah. So of course, certain of these stocks, if we will also go through later. I mean, some of these stocks, certain of these stocks uh, have actually went up by a lot. Example, Apple has shot up to a lot. Whether this is a potential time to enter or to actually sell, that's also a question. And the other stocks like Facebook is probably, I would say, is trying to go up, but I think last week the run up has been actually quite good, but you see right now, because of the coming meetings on Wednesday, right, you see that the run up has been slowed down in the last 2 days. That means Friday and yesterday. Yeah, and we'll cover this. And the other stocks which I am actually eyeing on is these three stocks. I mean, Starbucks. Starbucks has retraced a bit from last week, and then Microsoft. I mean, has been running up by a lot. Yeah, we'll go through, and also TSMC. Yeah, so these are the few stocks which we will actually go through and see whether there are potentials during this time where we can actually do some setups and entries on the stocks. I mean, this is just our evaluation on the based on the charts and all. So you see here is first one. What did we do? Facebook, right? Yeah. Okay. So Facebook, Meta. Okay, I prefer to call it Facebook lah. Yeah, I mean, I don't know about you, but I would prefer to still name this stock Facebook, because Meta seems not so nice lah. Okay, so if you look at Facebook, right, I mean, in the earlier months, you can see that it has been trending quite nicely over this channel, right, and when the negative news on some whistleblower and all came right. I think it actually came down by quite a lot, and also during the September October time when the market was actually down, right? It actually came down, and now it is actually still hovering around this level here between 350 between 350. Let me just put it between 350. Let me find this. I would say between 350 and also this 3 308 or 310 here lah. Yeah, so it has actually been trading around this range, and of course when the Omicron thing gone away, it has actually uh, uh, bounced up from the bottom here, bounced up for the past 1.5 week, 1.5 week. Yeah, but you see that it has been facing some resistance over here, where you actually see that even yesterday it actually went up by quite a lot, about at least $7-8, I would say. Yeah, and then it closed lower yesterday. Yeah, I mean, probably some profit taking there lah. I mean, if I were in this trade, I would also probably profit take when it has actually gone up by about how much here? 313. I think this is day, right? Yeah, 1, 2, 3. Yeah, about a week it has actually gone up by about $20 over dollars. You see, $20 over dollars in a week. Yeah, so I would probably profit take when it's actually up here. Okay, so if you look at pre-market right now, it's actually about 335. The close yesterday was 334. So I would say again, this would probably, I don't know, it would trade in range. I don't think it will continue to go up until after Wednesday for Facebook. But of course, if Facebook continue to retrace right in the next 2 days, right? Yeah. And if it actually retrace, say, to this level of about 325, 325 or 320. Yeah. Sorry. Yeah, so if it retraces, right, I would probably try to actually put in some trades, safe trades, which is some spreads, some put spreads is possible at the levels below here. Yeah, about 310. 310 is actually a support level from this line here. We can actually do some bull put spreads at 310 to 305. Yeah, that means a $5 spread with spread here. Yeah. So this is Facebook. Okay. Okay, the next one we want to actually go through is Apple, right? Amazon first. Amazon. Okay, for Amazon, again, Amazon has actually gone. I would say you see the Amazon is actually trading in a very big range also lah. Yeah. Where is this? I would say somewhere. This is the high, right? This is the high, right? I mean, basically, it tried to reach the high. I think when the Omicron came, it fell by quite a lot, and now it's actually going back to the lower range. You see, it's actually going back to the lower range. Here is actually the lower range. Yeah. So about 3002, I would say 3002 is actually the lower range. 3007 or 3008 is actually on the upper side. So now it's actually in between here, right? In between here. So for me, earlier I have already placed some trades on some spreads. Again, mostly nowadays I do a lot of bull spreads when basically the prices comes down, right? when it's actually coming down, I start to actually place spreads. So earlier, I think about 3 2 3, I think 3 3 yeah. So when it was actually coming down here, I think we started to actually do some trades here. I mean, it is probably not profitable at the moment because the price continue to come down, right? Yeah, but of course, hopefully it can actually bounce back up later on. I mean, even if it go down below, and if there is actually a support at 3,200 here, right? I mean, basically the price can actually go up. Yeah. So this is Amazon. I mean, Amazon is a good candidate for spreads. But watch out, lah. I mean, if you are doing spreads for Amazon, right? The how to say, I would do it on a very red day, lah. I mean, when Amazon sometimes you see they drop by about 100 points a day, right? 90, 70, or 80 points a day, right? So those are the days where I would actually start to actually take the opportunity to do spreads because the volatility is high, so the premiums are also good. Yeah, and if you look at Amazon after uh, big red candles, right? After big red candles, right? They tend to actually bounce up. Yeah. Here is one long one. I mean, this is one long, and of course, even on the very one long, they will actually come down. So when it's actually coming down with a very long one, these are few days, but subsequent you see it comes up again. Yeah. So these are the times where I try to actually put in trades. Yeah. For Amazon. Yeah, Amazon. And then if we move to Apple, right? Apple, I'm actually still stuck in a iron condor lah. Okay, and of course the iron condor which we did was already in a very deep in the money position on the call side. Yeah, because I mean after the for Apple, right, after the time when they actually started to talk about this what is that, EV, right? EV, I think they started to talk about EV somewhere here lah. Even when the Omicron come, is no effect to Apple. You see. It has no effect on Apple. I think Omicron actually came somewhere when somewhere here, right? I think somewhere around here. Not much effect, and it continued to actually go up. Only yesterday itself, it has actually came down a bit. And of course, for me, I would not. I mean, I don't know. I mean, some people want to chase this. I mean, like just like Tesla, the higher it goes, the higher it can go, right? Yeah. But for me, I mean, I'm not chasing these stocks and entering a bullish trade at the moment. Yeah, because it has actually moved very far away from the moving average. Yeah, and you can see today itself is also not moving much. Yeah, but I think Apple is trying to reach the, what is that, $3 trillion club, right? $3 trillion club. So they are, I'm not sure what is the price where they need to actually reach, but they are close lah. They are close to getting to there lah. Yeah, but hopefully before it gets there, right, it comes down a bit lah. Come down to this level, save my trade, save my iron condor trade a bit so I can actually exit it. Only few more days left. Yeah. Okay, so that's Apple. I mean, for those who have actually entered during this time, I think it is actually a very good run up lah. Yeah, good run up lah. I mean, if you are just on a short-term trade, I would say it's good time to actually just take profit right now. Let it retrace a bit before you go in another bullish trade lah. Yeah, I mean, otherwise it can come back from, I think earlier it was actually running up to about 182, 183. Yeah, if it runs down here, there's going to be about $20 reduction in the price. Yeah, which can be very painful when you actually reach up here and then it comes back here. Yeah. If you have any questions, just post in the chat. Then I can actually have a look at it and answer some of those questions. Yeah. So if you look at these strong stocks, right? I mean, at the end of the day, why I choose these fundamental strong stocks, right? I mean, when the market is up or down, right? Basically, you can see that they tend to not don't have a movement. That means a big movement. I mean, uh, in a range, you can say that the highest it can actually drop is probably about I think in the past for each retracement, right? 10 to 15%, 10 to 15% probably range 10 to 15. Let's just check for, let's say, Amazon. What's the range that they drop each time? Yeah, here you see 10%, right? So here is 10%. This was the November and the Omicron thing lah. Yeah, and then Facebook is here. Facebook this time it actually dropped about 13, about the, all the to the lowest about 15%, 15%, yeah, 15%. And then Apple, Apple no drop lah, Apple no drop lah. If you look at the previous drop, right, it's only dropped about 12%. Yeah, but of course, the thing is that when they drop by 12, 10, or 15%, right, the tendency for them is actually back to go up, to go up again. Yeah, as compared to some stocks. Let's say, for example, you take other stocks, which a lot of people trade this type of stocks. I can actually show you. For example, you see, if you are actually trading this stock, which is actually very hot, I don't know if you know this stock. Do you guys know this stock? Peloton. Okay, so Peloton, right? I mean, during the pandemic, right, it has actually gone up all the way to $170, $170, and this is actually one of the very hot stock, which a lot of people actually went in to buy this stock lah. But this year itself, I mean, it has actually a very disastrous start of the year, that where you can actually see that this stock has actually came down all the way about 76%. Yeah, it actually came down about 76%, all the way down. You see, yeah, and the first round when it actually retraced was 50 over percent. It tried to actually recover itself, but here, right, it could not. I mean, I think there were many negative news and a lot of things about this company lah. I mean, who nobody wants to continue to actually ride a bicycle with a video, is a video or TV in front, right? A trainer or something, right? Where you also need to actually pay subscription to actually do that. I mean, when people don't need to actually stay home, they would probably prefer to go to the real gym where they actually meet people and all this lah. Yeah, not to actually see the TV in front of the bicycle. Yeah. So again, this is one drop, and it had never recovered. And of course, you can see that during the earnings last round here, it has also dropped to by another 41%, 41% from this level here. Yeah. So if you have actually entered at this level thinking that it will go up, right, and you did not actually sell this and you were waiting to go back to the top, right? Yeah. Again, you will be worse off by about 40% in such kind of stocks. Yeah. So there's actually no so-called continuous recovery or uptrend for this type of stocks. Whereas if you actually look at the FANG stocks, right, FANG stock, however bad they come, I mean, Facebook is actually one of the ones, the current ones which is actually coming down, but it's not that bad lah. I mean, here to here is probably about 20%, right, 22%. But eventually, if you actually go on a broader timeline, a longer timeline, right, I'm sure Facebook will actually continue to go higher, go higher. Yeah. Same as the other stocks like Amazon, or even Google, right? Google we haven't covered, right? Yeah. So Google is also here. You can see that it has actually gone to all-time high here, right? Yeah, and then it came down a bit when the Omicron thing came, right? And now it's trying to actually go up again. Yeah. So these are the stocks which are temporary. They can actually come down, and when they come down, retrace. So these are the time when, as a trader or even as an investor, right, you actually start to take on some positions for these stocks. Yeah, for these stocks. Yeah. Yeah, and Netflix is also one. I think the retracement this round is actually quite huge. You see, so of course, last week it tried to actually go up, right, and this week it's actually coming down again. So when it's actually coming down again, this actually gives us an opportunity to actually enter into some positions here. And I've been trying to actually enter into a spread for this Netflix for probably already a few days lah. Yeah, and hopefully it can continue to come down a bit for me to actually get into the position, because I'm not willing to, how to say, pay I mean collect less premiums and go on a higher strike. I'm actually looking to work on this at a much lower strike. I think about 580 if not wrong. 580. This 580 here. Yeah, I'm trying to put in a position here lah. Yeah, I mean based on this level here, I think it's actually a safe level for me to put in a trade here. Yeah, somewhere around here. And of course, if it retraces more, right? If it retraces more in the next days, right, then probably you will reach my target entry lah. So I mean, there is no rush into any trades at this moment. Even for myself, if I can't get the good price, right, I won't enter into the trade, because the market volatility is actually quite high right now, right? So, I mean, if I can enter, I enter. If I don't enter, it's also okay for me. I can actually wait for later or next do it next year. Yeah, keep some bullets for next year in case it comes down more, and the Santa rally does not come, right? Yeah, then we can actually do more trades to bring it on for next year. Yeah. So these are the FANG stocks. As I said, FANG stocks, you can actually monitor them and understand the so-called price patterns of it, and put in so-called target entry points of the points which you are actually comfortable to actually enter into trades. And you can do various trades. I mean, spreads is actually one how to say, very safe trade because you, on top of the price level here, right, you actually still get to get in the trade with another maybe 7 to 15% buffer, because you can put trades at lower. And of course, if there are opportunities that you feel that there are actually imminent bounce of the stocks, then you can actually enter immediately so-called bullish trade. Yeah. For example, if you feel that at this level, right, let's say this level here, where the stocks start to actually do a double bottom, right, a small double bottom here. Here's one, right? So if the stocks is going up here, right, and if it comes down here and it bounces up here, yeah, with a bullish candlestick, right, yeah, above this line here, then of course this is actually a entry signal for you to actually go long on this yeah, go long on this. Yeah. And of course you can look at other signals like the RSI. Yeah, of course, if RSI goes up above 50, that is, or sloping up, that's another good sign for you to actually do a bullish trade. Or MACD is also one signal which you can actually use. Stochastic oversold level is also one signal which you can actually add to support your bullish trade. Yeah. Okay, so that is FANG stocks. On top of the FANG stocks, earlier I actually mentioned on three other stocks which I am actually always looking at this. Yeah, because a lot of times we don't need to actually have a lot of stocks to trade. I mean, there are so many thousands of stocks for you to trade, right? How do you know actually which kind of stocks to trade? A lot of people actually ask me, right, to actually give them scanners, scripts, and all these kind of things. Even personally, I don't use scanners. I have a lot of different kind of scanner scripts. That means oversold scanner script, overbought scanner scripts, and all these kind of various scripts lah. Yeah, and I personally don't use that much of those scanner script, because every time when you scan for using this kind of scripts, right? I would say easily you would actually get 100 to, if not 500 stocks that appear in the scanner. Yeah, any of you guys actually use scripts to scan for trades, and is that the tendency? Is that the tendency or the results which you get? Is that the results which you get when you actually do use scanner? For me, yes lah. I mean, so instead of using scanners to actually do this, right? I mean, I keep myself a watch list. I keep myself a watch list. Uh, Let me see, where's my watch list. Okay, I keep myself a watch list. Yeah, you can actually see that there's actually a watch list here. Yeah, this is actually my watch list lah. Yeah, that the common stocks which I trade, the stocks which I am actually familiar with, and I just basically trade around this kind of stocks. Yeah, rather than trading on stocks which you are not familiar, uh, and on the price patterns, because price patterns is actually important in our trading. Yeah, and after a while, if you look at how the stock behave, right, you would get a feel of where, I mean, probability lah of whether it will go higher or lower. Yeah, I mean, for example, if you look at BA, right? If you look at BA, this is Boeing, right? Boeing, right? Yeah. So now Boeing is at 197, right? Yeah, and of course, potentially, I would say, if it actually go down to about 187, back to this level, again, this is one potential level for you to actually put in a bullish trade. You can actually see on a longer term, right? Let's see. Wait. Okay. Yeah. You see this Boeing, right? I mean, basically, I would say this is going to be one level where about here, right? This level 190, 190, or even if it, that's why I say if it go down below 180 something, it's actually already one good level for you to actually do trades. Yeah. But you have to uh, go in and out fast for Boeing lah, because you see for Boeing it actually come down and it goes up for a while only, and then it will actually come down again. Yeah. So for Boeing, I mean, if your account is big, right? I mean, if you have a big account, you can actually just do a simple cash secured put. When it has a very big red day, do a cash secured put. And when the stock goes up the next day or rebounds, right, then you exit the trade. Yeah. But of course, there's no guarantee in all this trading. I mean, if you even if you reach 190, if you think it's safe, it can go down further, of course. Yeah. So these are the things which any traders will have to actually assess their risk and enter the trade according to their appetite. Yeah. So this is the watch list. What else is on my watch list? how many of you guys are interested to actually get my watch list? Anyone of you interested to get my watch list? No one interested. If you're interested, type you're interested in the comments. Yeah, I will let you know how to get my watch list. Dave, you have my watch list already. I thought I gave you my watch list. Yeah, you got my watch list already, Dave. Maybe the latest one lah, where I added a few new stocks inside there lah. Yeah, I give you an updated one then. Yeah. Okay, so where was I? Starbucks, right? Starbucks. Okay, if you look at Starbucks, right? Okay. I would say I think earlier we did many trades lah on Starbucks. Don't look at this weekly one, look at this daily one. Okay, so for Starbucks, I mean, again, Starbucks, I would not say that it is actually on a run up anymore lah. But when it actually goes lower, right? I mean, basically, you can see that when it tends to actually go to support level like here, right? I mean, chances are it will actually go up, go back up, go back up. Yeah. So I mean, like this level of about 110, right? I mean, this is actually a target which I always eye at lah. Yeah, I always eye at. Yeah. In the past, 115 is actually the level which we look at. 115. Yeah. But now I would actually place the so-called target price lower to be at 110. Yeah. If you have opportunity for Starbucks to actually come back to about 110, right? So that is the time where you can actually start to add on to some bullish position. I mean, it can be a spread. It can also be how to say a call spread is also fine. I mean, if you want to do a direct call, I would not advise for you to actually do a direct call. Yeah, because how to say Starbucks price in the recent times, it don't really move up. I mean, on a continuous long trend. It goes up $1, $2, $3, and then it lose steam, it comes down. Yeah, like you see here, it was actually down here, right? It went up about $2 or $3. It come down and then it continued to go up about here will be about $4 to $5 from here. Yeah, so I would say the range for Starbucks for you to enter and exit $3 to $4 lah. That means once you reach $3 to $4 from the price you enter till 3 to 4, I would say it's time to actually exit lah. I mean, sometimes it goes even more, but I don't take the chance lah. I would actually exit if I do this kind of trades, maybe about two. I mean, per trade lah, per contract, maybe about $200 profit. I would actually already exit the trade. Yeah, this would probably be some bull spreads, bull call spreads, and sometimes I finance it with a naked call. Naked put, naked put. Yeah, and the naked puts which I put is actually at a level of 105 to $100. I don't think it reached maybe about 105, 102, 105. That means the naked call. Naked put, and then a bull call spread, which is financed by that naked put. So the cost of entry for me is actually very, very low for that kind of trade. Yeah, the debit trade, I hardly pay anything above $1, and I exit the trade with maybe about $200, 100 over to $200 profit. And sometimes I don't even exit the naked put position. That means I will continue to let that naked put run. Yeah? Whereas the bull call spread, which I have entered, right, I would have already exited the trade. Yeah. So these are some of the trade structures that which I actually do, and I break up the exit of the trade, uh, not all at once, not all at once. Yeah, because when the price run up, right, and when you have a naked put here, right, it's already how much, $10 um, away from the put. If I did a 105, now it's already $10 away. Yeah, and you don't see that Starbucks suddenly drop down by 10% in a short time, right? Yeah. So I mean, this you come to you when you are familiar with the stock movement, and stocks are also got season one. I mean, sometimes the season, like here you see it move sideways season. Sometimes here it goes higher, high, right? It goes higher, high, and then here it dips, and then it shoots up. So it's seasonal one. I mean, you cannot say that the pattern like this here, then it will continue like that, right? Just like maybe your girlfriend or your wife can also be seasonal one. Yeah, it can also be seasonal. Today she's very happy, tomorrow she's not happy. Yeah. So it's also like that one. So the stocks is also like that one. So you have to actually understand it very well in order to actually take the best opportunity in the stock. So that's why I said, if you have a watch list, you work on your watch list on stocks which you are familiar, then it's actually very how to say, you trade along these few stocks lah. Any updates? God. Dave is one of our students in the Thrive Business Builder program. Yeah. Okay. So that is Starbucks, right? Okay. Then the other one which I was actually talking about is what stocks did I talk about? T Microsoft, right? Let me put up this. Oh, why did I type this here? I should type this here. Okay, so again, Microsoft is one very fundamental, strong company, very fundamental, strong company. And after the last round dip, when it dropped back to this 50 moving average, right? No, this is actually, yeah, this is 50, yeah. So this, when it dropped back to this 50 moving average, it actually bounced up. Yeah, you can see that this level is always a very okay level for it. Yeah, this is slightly lower, but I think it's still okay. It bounced back up above 15. So again, it's actually at this level. Yeah. So again, it has actually run up by, for the past week, very strongly. I mean, in a day, basically Microsoft can actually go up here. I think here it went up by about $6 or $7 in a day. Yep. So yesterday it was actually down, and of course, if there are opportunity for it to actually come down again, that's the time where you can actually put in either a bull put spread, which is actually running below, and also some a bullish trade, direct bullish trade also is possible when it actually come back to moving average. Okay. Okay. So I will. It's 8:19 now. I mean, okay. I got to cut short soon because is some disturbance. My daughter is asking me to feed her already. Yeah, because the food is outside the door. Okay. So far, you guys okay? I just finished up one stock, which is TSMC, right? Oh, okay. Okay, bye bye. Okay. So okay, we can continue. So the let's see. Hey, how come the stock don't show one? TSMC. Something wrong? Taiwan Semiconductor. Okay, here is Taiwan Semiconductor. Okay. So earlier you remember that all the chip stocks has actually run up a lot, right? TSM is actually one, NVDA, right? NVDA is also one, yeah. But you see that most of it has actually came down from the highs already for the past 2-3 weeks. Yeah. Again, TSMC is actually one very fundamentally strong company. I mean, and of course, if you see here is actually coming to 116, right? 116, right? Yeah. So for me, I would say for this one, if you look lower, right here, you can see that there is actually one level here, which is has been come down many times lah. So this was in May, this was in August, this was in October. Okay, and okay, okay. I would say if the market is not the, I mean, basically all this reduction is mainly also because of the market decline. Yeah. So for December and January, right, if the market is actually not retracing by more than 5% or 5%, right, I would say TSMC probably would not come down here again. Would not come down here again. Yeah. Probably at this level, yeah, is one level for me. I would think would be a level normal market condition. It because the price has not to say this price has actually trading been range for a long time. For the whole year, basically you can see that it trades in range of about 105 to about 125, 105 to 125. Yeah. So on this range, right, I mean, if it basically come down to the lower range, I would say it is also okay to actually do some trades or even put in some long-term positions when it comes back to about $110 or even $112. Yeah, TSMC. You see, for the whole year, it has actually trade in range here. Yeah. And now I think these few days it has come down a lot. And of course, if it comes down more to this level of 112, probably I would put in spreads below spreads below. Yeah. If you don't come down here, um, 50-50 lah. I mean, I would say the tendency for it is to continue to come down to this level, first level at least 112. This second level depends on the market. If market runs up again, I would say this is the last level which you will retrace, it will go up again. Yeah. So these are the three additional stocks which I am monitoring for trade positions. Starbucks is one, and then Microsoft only when it retraces. Microsoft only when it actually retraces to 50 moving average, then that's the time where we can actually put in a bullish position or investment position is also fine lah. Yeah. I think I think the highest it went is now about 330. Yeah. And again, for say Starbucks and say Microsoft and also even TSMC, right? Okay. Starbucks and Microsoft is actually so-called on the consumer side. And these stocks we tend to like because it is actually so-called durable goods. I mean, whether it is food or whether it is software, right? These are the things where people continue to actually use or consume. Okay, so when things people continue to use and consume at any market situation or any economic situation, right? Okay, those are the stocks which are tend to actually go up over time, tend to actually go up over time. Yeah. So when there are retracements and all this, it is safer to actually enter into trades on those stocks rather than retracement for stocks like Peloton. Okay, you can see Peloton drop 20%. Then you think, oh, 20%, it's actually dropped by 20% already. You can actually enter a trade. And if you enter a trade for Peloton, right, it can go down another 10 or 20%. Yeah. And those are, how to say, those are stocks which I would say you you tend to use it more during certain times. Like during the pandemic, people tend to use that bicycle at home because they cannot go to the gym, right? So they buy this and use at home. And when they can go to the gym, they chuck it in one corner. And most of the time, if you have exercise machines at home, right? I don't know how many guys have exercise machines at home. If you buy exercise machines at home, I can guarantee you will probably use it 3 months, maximum 6 months. After that, most likely it will end up in one corner of your house. How many of you agree? Yeah. So those are exercise machines and all these kind of things. After a while, you find it boring to exercise alone. If you want to exercise, go to the gym, or you go to the park and you run there and you see some faces and you see some birds, fresh air and all this. Yeah. And yeah, so those are the how to say, those are the kind of stocks which we see. Those are the opportunities lah. I mean, when the price retrace, we tend to have higher chance for it to actually rebound on the basis of it being fundamental stocks or stocks that have products which are so-called tangible, or people will continue to use it regardless of time or economy. I mean, yeah, Microsoft you use every day one, correct? I mean, economy bad, you also use Microsoft, right? I mean, there are people, I mean, when economy bad, they buy pirated software. Okay, but companies won't do that. I mean, companies won't buy pirated software when the economy are bad, right? I mean, they will still buy some licenses and all these kind of things, right? Yeah. And Starbucks. I mean, if you are a coffee drinker and if you used to drink Starbucks, right, you will tend to continue to go there, lah. I mean, only for people who go, lah. I mean, for me, I would say okay, lah. I mean, maybe few months or 1 month once or few months once you go, but there are people who go there every day when. Yeah, and these are the how to say, these are the people who 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 patronize lah. I mean, people who click it with it already. It's like a drug lah. I mean, if they want to meet people, they go Starbucks. If they want to drink coffee, they drink Starbucks. Yeah. So that is it lah. I mean, if for me every week I eat McDonald's lah, at least 2 or 3 times, 2 or 3 times a day. Yeah. So again, like McDonald's is again a stock which has actually gone to all-time high again, all-time high now. Yeah, McDonald's. Yeah, because people tend to get one convenience, they consume this. Yeah, so these are the stocks which you need to keep an eye to watch for, whether market is good or bad. Yeah, so these are the stocks which will give you the highest potential, especially during this time of volatile time. Yeah, so that is actually the message which I wanted to share with you guys today, which is this lah. I mean, when all fails, we go back to basics. I mean, we go back to basics means go back to the fundamental strong stocks to actually trade on them, or so that you can actually get more higher probability of win in the trade. Yeah. Okay, so that is all for this week. Yeah, and I hope today after I finish my talk, the counters would actually go up. Let me see before we leave, right? Let's see if the market is going up or not. No, the market is still going down. So when the market is going down, right, again, opportunity, tips are opportunity, strong stocks, fundamental stocks, if they actually retrace to certain support level, that is the time where you can actually do the so-called bullish trade for it to actually run up when the market improves. Yeah. Okay, so I catch you guys next week. And for those who have actually joined me today, yes, great. Yeah, great to see familiar faces every week. Yeah. So catch up with you next week. And of course, if you have any questions, please put it in our Facebook page. Yeah, any questions, it can be any questions, we will try to actually answer um, any of the questions about stocks, about strategies, if we can give you an opinion, no, not a recommendation, but what we feel, then of course we would be most willing to actually share with you from our Facebook page. Yeah. Okay, so until next week, I catch up with you guys again. And don't forget to actually like and share our videos, past videos. Please, by all means, go visit them on our Facebook page. So bye bye. I catch up with you next week. Stay safe. Bye bye.